Okay, so you were right on the money with this whole interest rate cut prediction. You sent over that Alec Young article about dividend growth stocks, and wow, talk about perfect timing. This isn't just some, boring financial analysis. This is like he's handing us the cheat codes right before the market goes wild.
Yeah, it really does feel that way.
Yeah.
This could be a huge turning point. Just think, he throws out this number, $6.3 trillion with a T,
Yeah.
just sitting there in money market funds. Young calls it the money elephant in the room. And, well, he's not wrong.
$6.3 trillion, that's a lot of elephants, that's for sure. But honestly, why should we even care about money markets right now? What's the big deal?
So right now, they're the safe bet. Rates are higher, you park your money, get a decent return, no problem. But the Fed cuts rates, like Young says they will, and those yields, they'll tank, like fast. He's talking they could plummet to 3% by 2025. Suddenly, that's safe haven. Not so safe anymore.
And that's where dividend growth stocks stroll in, right? Like the heroes of our story.
Mm.
But let's be real, there are tons of investing options. Why get excited about these stocks in particular? Especially now.
Because it's all about getting a head start. Like imagine
Yep.
everyone's about to be scrambling out of those money markets, looking for the next big thing, dividend growth stocks. They're going to be ready. Young even says that S&P 500 stocks paying dividends, already outperforming those that don't.
So, momentum is already building. Is that like a gut feeling, or is there actual data to back that up?
Oh, there's data. Get this. Since July 11th of last year, stocks with a 3% yield, Herbert, they're up almost 11%. It's a sign, people are starting to notice.
Hey,
But it's early enough that we can still get ahead of the game, and that's what we're all about.
Okay, color me intrigued. But, gotta ask, every financial article talks about compound interest. Heck, Young even quotes Einstein on it. Is it really that life-changing?
It's not just life-changing, it's everything. Think of it like this. It's the snowball effect, but with money. Since, get this, 1930, the S&P 500 has returned almost 3% more every single year just from those dividends getting reinvested. That's like the difference between a good retirement and never having to think about money again, ever.
3%, yeah, that doesn't sound like much, but over a lifetime. Huge.
Exactly. It's like that saying, right?
Yeah.
Best time to plant a tree, 20 years ago. Second best time, today. Same goes for this kind of investing. Earlier you start, the more time that compounding magic has to work.
Okay, so we're not just chasing the biggest yield here, right? It's about those dividends growing over time. Yeah, what makes that so important?
Exactly. A company that keeps increasing its dividend, it's like they're sending up a flare. Hey, we're doing great, and the future's even brighter. That's the kind of company you want in your team. It just screams strength and stability.
It's like getting a thumbs up from the company itself. All right, let's shift gears a bit. Let's talk volatility. That's the thing that keeps most people up at night. Can these dividend stocks help us sleep better too?
You bet. Young's research actually shows that since 1990, those dividend growers, they've consistently beat the market when things get shaky. And here's the kicker. The wilder the market, the better they do.
So it's not just about growth, it's about weathering the storm.
Right, exactly.
Yeah.
And who doesn't want a little of that in their portfolio?
Now you're speaking my language, but gotta confess, I'm a sucker for a big, juicy dividend yield. Show me a big number, and I'm interested. But Young, he seems to warn against chasing those big numbers. What's the catch? It's like, too good to be true. Probably is.
Right. Those high yields, tempting, but maybe a red flag. It's like the company's struggling, waving that big payout around, trying to, I don't know, distract you.
Yeah.
Because their future, not so bright.
So you're saying a high yield could be like covering up some problems. That's a good point.
Like a cry for help, almost. While those companies, the ones with solid dividend growth, they're quiet about it. They let their success do the talking.
So it's not just about the dividend, it's the whole story behind it, right? Like, what's their track record? Are they consistently growing, or is it a one-time thing?
You got it.
Yeah.
Young even uses some examples, right? CVS, Walgreens, AT&T, all those high yields, but what's their long game?
Okay, gotta be smart about it. Not just grabbing the shiniest object. What should we actually be looking at then?
It's like you want to be a partner, right? Not just chasing a quick buck. You want a company with a solid foundation, consistent growth, the kind of management team that wants to reward you for sticking around. That's how you tap into that compounding magic we talked about.
Makes sense. You want a company that's playing the long game. So how do we find these superstars? Does Young give us any hints?
He does. He talks about this Vanguard ETF, the dividend appreciation one. VIG.
VIG, yeah. I've heard that name floating around. What makes it so special for this, though?
It's like it was tailor-made focuses on companies with that history of dividend growth, not just those high yields. They're the consistent ones, the ones sharing their success. And bonus, super low expense ratio.
Okay, hold on. For those of us who aren't, fluent in ETF, what even is an expense ratio? Why do we care if it's low?
Basically, it's the fee you pay to own the ETF. Percentage of your investment, right? Low expense ratio, more money in your pocket, less going to the man.
Makes sense. So with VIG, we're getting a basket of these awesome companies and keeping more of our profits. Win-win. Anything else make it stand out?
Young mentions that MAP signals, they track institutional money, right? They give VIG a high ranking, meaning the big players, they like VIG. Another good sign.
So not about the quick payout, it's about those consistent winners. And VIG sounds like the place to start. But you're going to tell me to do my own research too, right?
Always. VIG is just one example. What works for one person might not work for another. Got to think about your own goals, how much risk you're comfy with, all that.
Of course, always rule number one. But this feels different, Like we're onto some big here.
Yeah, it does feel like we've stumbled onto like a whole new playbook for this whole market shift. So for our listener, maybe they're just tuning in. What's the one thing they need to know? Don't wait. This isn't about, timing the market perfectly. It's about getting in position for the long haul. When those money market rates start to drop, and they will, you want to be ready. Dividend growth stocks,
Yeah.
especially now. This could be how you not just ride out the wave, but like surf it.
Like we're getting in early on something big. Young seems to think this could be huge, like a whole new way of looking at investing, not just a fad.
Yeah, and I'm with him on that. You look at the numbers, the power of that compounding effect, how these companies are performed, it's hard to argue.
And the comparison he makes between those solid dividend growers and the ones that are all hype, no substance. That's huge.
Totally. It's like, what's that, the tortoise and the hare? Slow and steady wins the race,
Yeah.
right?
Exactly. It's not about being flashy, it's about quality. Finding those companies that are in it for the long haul and want to take you along for the ride.
That's it. It's not just about a dividend check. It's about owning a piece of something built to last.
Well, this deep dive has definitely given me a lot to think about. Listener, if you're anything like me, you're already pulling up your brokerage account, doing some research. But here's one last thought. What if this whole shift is even bigger than anyone expects? Like a fundamental change in how we think about investing in, well, a changing world. That's got to be worth a look, right?